Hello traders and welcome to another video review. Today is Wednesday, November 23rd, 2022. Let's find out what is going on the Forex calendar today. Reserve Bank of New Zealand made its interest rate decision and they decided to leave the interest rate at the level of 4.25. Just as expected, so that's a kind of a good decision due to the inflation, rising inflation expectations. There was of course issued the RBNZ statement and then the press conference, so we will definitely take a look on the New Zealand dollar later on. German manufacturing PMI data scheduled for release at 10:30. The bunch of data from the UK in form of the composite PMI, manufacturing PMI and services PMI all are scheduled for release at 11:30, so we'll definitely take a look at the British pound today. And during the London session we have plenty of data regarding the US economy. We have the building permits, core durable goods orders, initial jobless claims, new home sales, crude oil inventories, and we have the FOMC meeting minutes release. So that's a key event of today. As you know, last time Fed hiked the rates again and indicated that there are possible hikes in the future, so it will be very interesting to see what is inside the FOMC meeting minutes. So that's our Wednesday on the Forex market. Looks very busy during all day in London session and during the New York session, so please stay vigilant, stay focused. It looks like it will be a very busy day for trading. Let's start the technical part with the New Zealand dollar analysis. The daily time frame chart of the New Zealand dollar versus the American dollar is showing us a very nice breakout out of the channel and breakout above the level of 6,056 pips, which is now the technical support. The market has been rallying from the levels that are being regarded as extremely oversold, and just recently during this breakout, a few days after the breakout, hit the level of 6,190 pips, and in the same time the RSI hit the extremely overbought conditions. So currently we are consolidating in a very narrow range, waiting for the movement to the upside to continue. However, please notice the fact that most likely after such a dynamic move, there is some short period of the consolidation ahead of the breakout continuation to the upside. So we already traveled 12.82% to the upside from the recent low made on the middle of the October. So very nice rebound in the New Zealand dollar. Outlook is bullish and we are waiting for more. What is going on the British pound? There's plenty of data on the from the UK. Let's find out what the British pound is doing, and we will gonna switch to the 4-hour chart. As you can see, not much is going on actually. The market retraced 38% of the recent move to the upside and is being right now locked inside of the consolidation, narrow consolidation zone, which is getting even more narrower. So right now we are trading just below the level of 1.1921. Any breakout above this level would indicate that the next local high somewhere around 1.1956 is getting ready for being tested, and then of course the last high, the swing high located at 1.19 2026 is next for the test. However, the target for the wave C is located a little bit higher, between 1.2060 to 1.2090. There is still a chance for another move to the upside in order to complete the wave C to the target level, as the momentum stays inside the positive territory above the level of 50, so the outlook remains bullish. And last but not least, because there is plenty of data from the US economy and FOMC meeting minutes, let's find out what the S&P 500 is doing. This is 4-hour chart of the S&P 500. Let me just make it a little bit bigger, and there you go. So what is going on here? We have retraced the 61% of the last wave down, so that's fine. Then the market tested the technical support at 3,921, and right now is trying to bounce higher towards the recent local high at 4,042 points. And all of these levels here are the extensions, basically. Those extensions are to the upside, of course. So this is 100% extension, and that's the 61%. So it's been tested already. So we can remove it, and it's gone right now. So let me just put the horizontal line for the recent rally high, 4,042 points. It looks like the bulls have the control over the market. They are still being the main force behind all of these recent movements. Momentum is positive, bounces from the level of 50, so it looks like the bulls want to control this market for a little bit longer, want to move the prices a little bit higher. Next target 4,110, which is the 100% of the projection of the recent pattern. Let me just show you this pattern. This is the bottom. So this is the bottom, this is, let's say, wave A, this is wave B, and we are targeting wave C, and there is 1-to-1, of course, target level for the wave C. And last but not least, because of the crude oil inventories, let's take a look at oil. What is going on here? There you go. Our target has been hit, as you can see. Very big downside move towards 75.17, and then there is very interesting candle. This is the candle on the 4-hour chart, very easy to recognize. It looks like a hammer, it looks like a pin bar, and since then we have a bounce to the upside, and the market is testing 82.7 right now. So this is still the technical resistance, and the market is getting a little bit closer towards the other technical resistances. We need to adjust our levels to the new data. This is the technical resistance, 83.58. The other technical resistance would be placed somewhere around here, so that would be 84.88. Let me just change the line to red. There you go. So that's the other 84.75. Okay, and the other levels are a little bit higher. The other levels are 88.08. So that's another technical resistance, and of course the last one is located here at the recent highs at 90.07. Of course, the key supply zone is still being seen between 93.73, 98.35, and the outlook for the crude oil remains bullish for a very short period of time. So we got this wedge here. So let me just change the color so we don't be really confused. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.